Right now, Bitcoin is doing something that most people overlook, especially when the price isn't making dramatic moves. And that's usually when the most important activity is happening. Because when you look at what's going on under the surface, you start to see a different picture than what most people are reacting to. At the moment, Bitcoin is showing signs of what's called quiet accumulation. That means instead of big obvious price spikes, you're seeing steady movement from larger players positioning themselves while the market is relatively calm. Over the past day alone, there's been roughly $1 billion in net exchange outflows. That's not retail behavior. That's not everyday investors moving small amounts around. That's larger capital pulling Bitcoin off exchanges, which typically signals long-term holding rather than short-term trading. At the same time, large holders, often referred to as whales, have added hundreds of millions in net inflows. So now you have a situation where supply is being reduced on exchanges while demand from bigger players is increasing. That combination is important because markets don't move based on headlines. They move based on positioning. And when supply tightens while demand builds, pressure starts to form. Now, add another layer to this. Spot ETF flows are still contributing capital into the market. That means institutions are not only watching Bitcoin, they're actively allocating into it. This is a completely different environment than what existed years ago. Before, Bitcoin was largely driven by retail hype cycles. Now you have structured financial products, institutional access, and long-term capital entering the space. That changes the dynamic entirely because institutions don't move like retail investors. They don't chase price. They position early, accumulate quietly, and scale over time. Now, when you look at derivatives positioning, it gets even more interesting, right? Funding rates are currently negative, which essentially means that short positions are becoming more expensive to hold. At the same time, the long to short ratio shows that there's still a level of bearish positioning in the market. So what you have is a market where many participants are leaning bearish while larger capital is quietly accumulating. That creates tension because if sentiment shifts even slightly, those short positions can get squeezed, which accelerates price movement up. This is where things can move quickly. Now, on the infrastructure side, you're also seeing expansion. Platforms like Schwab entering the crypto space is not random. That's distribution. That's access. That's making it easier for more capital to flow into digital assets. And when infrastructure expands, participation expands. That's how markets grow. So, at the same time, valuation metrics like MVRV suggest that Bitcoin is not currently in an overheated phase. It's not showing the kind of extreme conditions you typically see at major tops. Instead, it's sitting in a range that suggests fair value, which gives room for movement without the same level of immediate downside risk you would expect at peak euphoria. So, when you put all this together, you start to see a pattern forming. You have reduced supply on exchanges. You have increased accumulation from larger players. You have continued inflows from institutional products. You have bearish sentiment still present in the market. And you have expanding infrastructure making access easier. That combination doesn't guarantee immediate price movement, but it does signal that pressure is building. And historically, when pressure builds in markets like this, it doesn't stay quiet forever. Now, here's where most people make a mistake. They wait for confirmation. They wait for the price to move. They wait for headlines to catch up. They wait until it feels obvious. But by the time it's obvious, the move has already started. And that's the difference between reacting to markets and understanding them. The people who understand what's happening underneath the surface don't need perfect timing. They focus on positioning. They look at data, not emotion. They watch flows, not noise. They think long term, not moment to moment. And that's the shift that separates average participants from people who consistently move ahead. Because at the end of the day, right, Bitcoin is no longer just a speculative asset. It's becoming part of the broader financial system that includes institutional capital, structured products, and global participation. And the more that system develops, the more important positioning becomes. So, the real question isn't whether Bitcoin will move tomorrow or next week. The real question is whether you understand what's happening, why it's still quiet. Because in markets, the quiet phases are where the biggest opportunities are built.